Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So it was really tricky statement recently from the Fed, as I said in today's report on the Forex market. It's a lot of things to discuss in the weekend because we think that market, just in two words speaking, it's mispricing the hawkish background from the Fed. So they have heard the word disinflation and ignore everything else. So that has led to this rally that we've got recently. So currently, from a technical point of view, nothing has changed significantly, especially on the higher time frames, just because market is calling around the monthly overbought area that we have talked about 1950s, currently market 1957. Particularly speaking, for current month, for the February monthly overbought level stands on 1972. So theoretical market could fluctuate around the top. But at this point, as we have already discussed, as we do not consider taking the new long position by far. So we think that some downside reaction should follow. Maybe it will be triggered by different reasons, maybe some different statistics on different events, but from the technical point of view, this is not the good point for taking the new long position. I am speaking only about those who are trade on the daily and higher time frames. I'm not speaking about investors who would like to add more to their holdings of the physical gold. So you could do this gradually as soon as you get enough funds to add to your long-term portfolio. Because in the long-term perspective, we think that gold will rise significantly higher. So here is we speak only about the trading. That's what I have on the daily. Besides, on the daily chart, what is different to euro currency, you can see that despite recent action, this trend still stands bearish. So we have here some kind of the upward action, but trend has not changed in opposite direction, while on the euro currency it has turned to the bullish. But anyway, on the euro currency, the same situation, which stands in the monthly overbought as well, and not consider taking the long position as well. So on lower time frame, the only thing that we could try to do, if you would like to, of course, is to use the momentum of this recent rally. On the follow time frame charts, take a look what's going on. This engulfing patch that we discussed recently still starts working. So yesterday we have considered two possible ways. As you remember, we said you could try to take the short position with the minor, when the minor retracement moves stops to the break-even, market will hit around 1915 area, 1917, or just wait when this ABC patient will be completed and then makes the decision on the position taking. So currently you can see that this engulfing is working, it's forming some kind of the ABCD patient. Trend has turned bullish. So upside extensions, we see two possible targets. Nearest standing is 1962, which is 127 extension of this most stressing swing, and 1979 is 1618 extension. Based on this engulfing pattern on the lower time frame, we could recognize kind of the hand and shoulders that we also talked about recently. So we said this might be kind of the pattern. And here's drop loss to 1920 approximately. And currently market hits the OP already, but as you can see, this reaction was really fast as CD leg, as AB leg, so it means that the XOP also can be touched if non-farm payrolls will not intrude in overall process. XOP from technical point of view could be reached, at least it will be next targets 1973, which is very close to the 1618 extension 1979. It's right there. And since this extension 1962 stands just above this area, so you can see this market could most likely higher to touch it. This around the OP, it might be some minor bearish pattern. Maybe it will be on the 5-minute chart. This could be recognizable. That could trigger some minor pullback. If this will happen, and if you would like to use this momentum for trading on the intraday charts, for scalp trading, maybe you could consider this some pullback either to the 1944, maybe even to the 1935. If we will get lucky with the confidence support for a possible position taken for a possible upward continuation to the XOP. But in the current circumstances, more probable that it will be minor retracement. It's around 44. A few reasons. First of all, market is not at the very bottom on the daily, would not have any strong fib levels, and the reaction stands very strong. So that's why it's more chances that we get just minor pullback here with a possible upward continuation. If you would like to take part and you're not scared of new data that will be reported today, European Central Bank meetings, Bank of England, tomorrow non-farm payroll release, you are ready to go through all this stuff and keeping the position, well, you could try to think about it. But actually, currently, it's difficult to say how it will turn because at this point, retracement is not even has started. So just let's see what will happen, what the patterns will be formed, and in what manner overall performance will be.